Ask any stock trader or long-term investor, and they will tell you it's almost impossible to call a top in a stock or the markets. However, there are signs to watch for that can indicate when we may be nearing a top, and that you can use to take profits in positions or to close out on losing investments. The first sign to watch out for is an overvalued market. When stocks are priced way above their intrinsic value, it could indicate an imminent market top. Keep an eye on price-to-earnings ratios, called PE ratios, and other valuation metrics to assess if the market is getting frothy. However, remember that different stocks have different PE ratios, so you'll want to know when your particular investment is getting expensive. A stock like Nvidia, for example, always has a much higher PE ratio than a stock like Coca-Cola. So comparing Nvidia to Coke will not give you a good idea if the market or those stocks are expensive. Another telltale sign is excessive optimism. When everyone around you is excessively bullish and there's a general feeling of euphoria, it may be a sign that stock prices have peaked. Excessive optimism often precedes a market correction. Whenever someone comments on one of my videos accusing me of not being bullish enough, or telling me that stock will never drop to that low, how new to markets are you? I know we're approaching a top. Whenever bulls attack other bulls for not being bullish enough, you know the market's getting frothy. Next, be wary of divergences in market breadth. If the overall market is hitting new highs, but only a handful of stocks seem to be participating in the rally, it could be a warning sign. Additionally, keep an eye on investor sentiment. High levels of complacency and a lack of fear in the market might indicate a top. You can monitor sentiment indicators like the S&P 500's volatility gauge, the VIX, to gauge if investors are becoming too comfortable and complacent. The lower the VIX, the more investors are becoming too trusting with market action. Lastly, pay attention to market cycles. Markets tend to move in cycles, experiencing periods of expansion followed by contraction. By analyzing historical data and observing patterns, you can learn to identify potential turning points in the market. Remember, these signs are not foolproof, but when combined, they can provide valuable insights to help you determine if the stock market may be approaching a top.